One of the biggest mistakes investors make is constantly searching for the next big thing, the next hot stock, the next AI company to 10x, the next market trend. Meanwhile, some of the wealthiest people in the world built their fortunes doing something incredibly boring. They bought great assets at great prices, and they held them for a very, very long time. Today I want to walk through 4 ETFs that I believe have earned a place in the conversation when discussing forever holdings. Each brings something different to the table, and I personally feel comfortable holding each of them for the next 20 to 30 years. Together, they tell an interesting story about wealth creation. So as mentioned, I own all 4 of these. So as always, guys, do your own due diligence. This is not financial advice. So to start off, let's start off strong with VOO, or VOO, the Vanguard S&P 500 Index Fund. If I could only recommend one ETF to the average person, it would probably be VOO. VOO tracks the S&P 500. That means you're essentially buying pieces of America's 500 largest companies. Think about what that includes: Apple, Microsoft, Nvidia, Amazon, Meta, Berkshire Hathaway, blue chip companies that you probably use on a daily basis or at least interact with in some fashion. Some of the most dominant businesses on planet Earth. And the beautiful part about VOO is that it automatically adapts over time. The losers eventually get removed and the winners grow larger. It's almost like owning a constantly improving basket of American businesses that just keep growing. Historically, the S&P 500 has generated around 10% annual returns over long periods. No guarantees going forward. As always, investing carries some risk. If America continues innovating, building companies, growing profits, VOO is positioned to benefit. This isn't exciting investing. It's boring, and it's very effective. Sometimes boring is better, which brings me to my next forever stock, SCHD, the Schwab US Dividend Equity Fund. If VOO is the foundation, SCHD is the paycheck. SCHD focuses on high-quality dividend growing companies, but unlike many dividend funds, SCHD doesn't simply chase the highest yield. It emphasizes companies with strong balance sheets, hefty cash flow, and a history of growing dividends. That distinction matters because a high dividend today doesn't mean anything if it's going through a dividend cut tomorrow. The magic of SCHD is its constant dividend growth, quality businesses, and relatively low expense ratio. And the longer you own it, the more interesting the dividend growth story becomes. A dividend that grows every year can become surprisingly powerful over decades. That's why many income investors love SCHD and view it as a forever holding. Next up, we have the growth engine, VGT, the Vanguard Technology Index. This one isn't for income, it's for growth. VGT is heavily focused on technology companies, and whether we like it or not, technology continues shaping almost every aspect of modern life. Artificial intelligence, cloud computing, Micron's on a tear, companies I've never even heard of on a tear. Semiconductors, software, technology is at the center of it all. Think about history. Technology has always been at the center of everything. The Gutenberg Bible, the printing press, Henry Ford and the assembly line, the Industrial Revolution, all of that is new technology. The AI of today is no different. The companies inside VGT have been some of the biggest winners of the last decade. Now that doesn't mean they'll always outperform. Technology can be volatile. There will always be corrections, but if innovation continues driving the economy, VGT gives investors concentrated exposure to some of the world's most profitable and influential businesses. It's the ETF that can add a little horsepower to a long-term portfolio. Finally, we have VTI, the Vanguard Total Stock Market Index, or as I like to call it, the Just Own Everything Index. If VOO gives you America's biggest companies, VTI gives you almost everything. Large cap, mid-sized companies, small companies, growth, value, all under one umbrella. Thousands of businesses wrapped into a single ETF. Some investors actually prefer VTI over VOO because of its broader diversification. You still get the large companies that dominate the headlines, but you also gain exposure to smaller businesses that become tomorrow's Goliaths. VTI is one of the simplest investments ever created. Simply own the entire stock market and wait out every other investor. Simplicity has a funny way of working out in the end. So you may be asking, which ETF is best? And honestly, that's probably the wrong question, because they each serve a different purpose. VU provides broad market exposure. SCHD provides income and dividend growth. VGT provides technology-driven growth, while VTI provides total stock market diversification. The real answer depends on what you're trying to accomplish. Some investors may want to maximize growth. Some simply want the easiest possible solution, and that's okay. There isn't one perfect ETF, but there are some forever ETFs that I've mentioned in this video. What I find fascinating is that none of these ETFs are particularly exciting. There are no promises of getting rich overnight, no secret strategy, no complicated options trade. There's no trade of the century here, just ownership in great businesses. And historically, that's exactly how investors have built life-changing wealth. Not through brilliance, not through predictions, not through betting it all on black at the casino, through patience. If I were forced to choose investments to hold for the next 20 or 30 years, VU, SCHD, VGT, and VTI would all deserve serious consideration. And in fact, I do own all four of these in my various different retirement accounts and taxable income accounts. Because sometimes the best investment strategy isn't finding the next big winner, it's finding something good enough and just holding it forever. And that's becoming increasingly rare in a world obsessed with what's next, in a world where the average attention span is no longer than a TikTok video or a YouTube short. So guys, let me know in the comments, which one of these would you feel comfortable holding over the next 20 to 30 years? And as always, leave a like, comment, hit that subscribe button.